OPEC just voted against deepening production cuts. Also, we see Saudi Arabia cutting oil supply by 1 million barrels per day. Also, Russia just came out and cut oil supply by 500,000 barrels per day. So these voluntary cuts by Russia and Saudi Arabia are meant to, kind of help bolster the oil prices. But given we didn't see a deepening of production cuts, we're seeing oil prices move lower in reaction to this news. Also, this comes on the back of higher than expected oil surplus. And I'll get into that in a second here. But with that being said, let's talk about this. So what I'll do in this video is I'll go through the most recent news, and at the end of the video, I will give you a price prediction for oil in the short term. The OPEC Plus alliance had already instituted a 2 million barrel per day cut in place until the end of 2024, with several members voluntarily pledging to further those cuts. While OPEC Plus has not formally endorsed production reductions, market participants are following the possibility of furthering voluntary reductions announced by key participants to the coalition. Already, Saudi Arabia media has announced that they will cut 1 million barrels per day, as I had said, which has been in place since July, and that will end the first quarter of 2024. So, like I said, Russia also cutting oil supply here. So it's really just Russia and Saudi Arabia cutting oil supply. Also, in some news, interesting news here is Brazil is set to join OPEC, which I thought was quite interesting because all of these countries in OPEC, more than not, are pretty unfriendly to the United States. So this is kind of Brazil joining that pack of oil producing countries that are non-friendly to the U.S. And then I wanted to go into this. So we saw a build in oil supply. So we saw a surplus of 1.6 million barrels, which was actually a massive surprise. So this is kind of helping push oil prices lower, is that we're seeing U.S. crude build. We're seeing U.S. crude actually. So the forecast was for a drop in roughly 1 million barrels, but we actually saw an increase of 1.6 million barrels. Obviously, having more supply on the market is a good thing and should help push oil prices lower. So that was good to see there. That should help push oil prices lower. And then with that being said, let's take a look at the chart and give a price prediction for oil. So oil has topped out at this $78 level over the past couple weeks. It's where we actually topped out over the past 2 trading days. It's where we topped out last week as well on the 20th, the 21st, and the 22nd. It's also where oil had topped out in early November, or mid-November, I should say, on the 13th, 14th, and 15th. Therefore, I believe we see a larger move lower off of this $78 level, and I think we're going to move lower down to $72, which is where oil had bottomed out in mid-November, and where we've seen some consolidation over the past couple months. Therefore, I believe we see oil move down to $72.50 roughly and hold that level, especially as we're seeing those production cuts from Russia, from Saudi Arabia. Could see some other countries come in and cut production as well. But I think this $72 level holds for oil. And if you're looking to, get in on some UCO calls, some USO calls, I would say $72, $73 is a pretty good entry level. And then with that being said, let's take a look at the seasonality trends for oil. So this shows me the average monthly return for oil in its 77-year pricing history that I have access to. So we can see here that in November is actually the worst month for oil. So on average, oil drops about 2.4% in November, and December is the 3rd worst month in oil's history, where oil typically drops roughly 1% in December. So the 3rd worst month in oil's history. As we can see, October, November, December are the seasonally bearish months for the oil price. So this, combined with the news from OPEC, combined with the inventory builds we're seeing in the U.S., also, we're seeing this bearish seasonal trend. I think if you add it all up, it seems very likely that oil continues lower over the coming weeks. So that should be a positive for the general economy, right? Because, inflation is directly tied to oil prices, because energy prices really determine, or they help determine the prices of pretty much everything. So if you get an Amazon package, it's going to be flown in, then driven to your house, right? And that all costs cost money in terms of energy, right? So if energy prices decline, it typically helps inflation. So hopefully this should help tamper down inflation, which would obviously be a positive for the stock market. But with that being said, I hope you enjoyed this video. If you did, please leave a like and subscribe, and I'll see you here next time.